Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 17th of January 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 finished down just a touch to 7,393 points today, a new 5-week low. Speculation around US rates not falling as fast as expected and muddling Chinese growth figures weighed on the market, with volumes still well below normal levels. Worst performing sectors were energy, materials and real estate. Best were utilities and technology. All the major banks were lower, with Commonwealth Bank and Westpac both off 1%. Woodside Energy was the worst of the mega caps, off more than 1%, while the best were Aristocrat Leisure and Brambles, both up more than 1%. The A2 Milk Company was the best performer on the day, up 6%. Story number 2, plenty of talk about interest rates in the US. Rates in the United States, the world's biggest economy, matter because they set the tone for rates around the rest of the world, including Australia. Rates in the US started rising about 6 months before they did here, and they stopped rising well before local rates plateaued. That's assuming they have plateaued. So it's fair to say if the US starts to cut rates, then Australian authorities could move a few months later. The overwhelming view in the US is that rates will start falling in March, and there will be about 6 cuts this year. But a senior Federal Reserve Governor Christopher Waller overnight came out and said the Fed shouldn't rush to cut rates until there's clear evidence that inflation is well and truly defeated. That's probably not March. That sent global equities lower and the US dollar higher, meaning the Aussie dollar fell back below 66 US cents. The gist of the argument is that maybe US watchers have gotten a touch over-enthusiastic about rate cuts. Story number 3, it was a very tough day for the gold miners. Evolution Mining's share price tumbled 17% after it said it had produced 161,000 ounces of gold last quarter at a cost of $1,618 per ounce. It also revised its production figures for its Canadian mine. Those numbers didn't impress investors, and majors Newmont fell 5%, while Northern Star was off 4%. Story number 4, China reached its economic goal for 2023 as industrial production and investment climbed in the final stretch of last year. Gross domestic product grew 5.2%, data released by the National Bureau of Statistics show. Now, Beijing's official target was around 5%. Beat that. Given China buys so much of Australia's iron ore and other commodities, it's in our interest for the world's second largest economy to do well. The big question now is what happens next. And finally, story number 5, the US military overnight carried out new strikes linked to Houthi militants in Yemen amid escalating disruption to global trade, with more companies diverting their energy and other cargo to avoid the Red Sea. Shell paused shipments through the waterway, according to the Wall Street Journal. Qatar Energy and BP are among others rerouting amid security concerns in the region. Japan's Mitsui O.S.K. Lines has also joined other shipping companies in diverting from the area, according to Bloomberg. The US military Central Command said its forces struck and destroyed 4 anti-ship ballistic missiles that the Houthis had prepared to launch from Yemen. It's the third round of strikes by American forces on Houthi targets in Yemen in less than a week. The disruptions to Red Sea shipping is likely to push up prices of consumer goods, especially in Europe, and could slow or halt production of factories that produce goods that use that route. That's it for the afternoon report for Wednesday, the 17th of January, 2024. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, X and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed. The top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.